I'm ready.
Okay. Hey, good afternoon, guys. This is Ken and Shunlong at Tortoise Capital. This is the Research 2023 check-in, a work in progress for December 13th, 2023. Chunlong has been working hard on both the foundations and creativity courses and the bar-by-bar work. He's bringing his engineering mindset to the work, and it's been a lot of fun working with him. And looking forward to this presentation. You're going to see his engineering background reflected in his attention to detail. So we're going to be working on dashboarding and identifying mission critical information for our decision making. And so, without further ado, Chun Long, I'm happy to go on mute and hand the microphone over to you.
Okay, thanks, Ken. Good day, everybody. Today, my topic is make bricks build a foundation, which means I developed Excel spreadsheets and ETF database to support intraday swing and call tradings, all based on Dr. Ken Lang's method. So first about a little bit about myself, and then overview what I have done. Then a little bit about the Excel spreadsheet and the stock data, and move on to the ET database I built for myself next year. So I was born in and raised in Northeast China, immigrated to Canada in 2002, worked as design engineer for 30 years. I started my super trader program in 2018. I finished that in 2021. I started to learn Ken's teaching since 2017. Watched his e-learning course a couple of times, including the swing system, course system. Then last year, I started to watch the bar by bar course and joined the creativity tool twice. And then later on, I found that, I need to go back to the foundation. So I take that course. All I can say, Ken's website, Patreon website, and his YouTube channel is a gold mine. Literally, you can find 90% of Ken's teaching from there. About my Excel spreadsheet, it's a compare for parts. The first part is a symbol list, which is the ETF database, including Ken's several systems there. Also include the SP100 stocks. After that, that's individual worksheet for each of those symbols. Then after all the calculation done, I summarize the calculation in the summary parts. Later on, I add the customer reports, which kind of Ken's reports in different forms. This is the symbol list look like. Actually, it get the symbols set up, then get the intraday open, high, low, and the close volume and every volume. Also, I set up the group list so I can, filter those symbols in my way. This is the example of the individual worksheets. You get these symbols, get all the calculation done, and summarize in the top rows. This is the summary sheet. That's part one. They include all those Ken's swing system, also the max pins, strategy here. I add a once that's there is I call my overnight risk. The reason is if I set up a buy open order, if the symbol gap up, what is my mechanical risk to yesterday low? That's the my overnight risk means. I add that just for my swing trading. This is the part two of the summary part. It includes the 5 critical states and the Z1 and Z5 volatility there. This is the part 3. This is the statistics on the daily prices. This is what you see from Ken's daily report for about 350 symbols. This is the part 4. Is basically Ken's blended monthly rebalance. All metrics there. This is the multi-time frame NDX and the market condition. Apply those, 200 days MA as a, criteria for bull, bear, sideways to each of those symbols. Also include the ADX and the RSI as a weekly RSI.
Hey, let me stop you right there just for a second. Go back one. Go back one
Yeah.
slide.
Yeah.
Yeah. So the color coding on the ADX 14.
Yeah.
Tell me about how you are conditional coding
30.
that.
That's 30. That's just you said a 30.
Yeah.
And then about 30 is
Okay.
Dark blue.
Is dark. Okay.
Dark green.
Okay. Got it.
About 25 is the light
Yeah.
green. Oh, everything else is the
Yeah. My latest thinking on that is that
yeah.
you know, I don't want to interrupt your flow here, but just I don't want to forget to say this.
Yeah.
My latest thinking on that is that especially when you start looking at forex and some narrow ETFs and all that, that ADX can start to vary once you get outside of the large caps. And so what I've done is I've taken the historical performance of ADX for every symbol and then found out what was normal and average for them. So like 30 is still pretty good ballpark for the S&P, but there are other symbols like the Qs and IWM that the what makes it abnormal is more than what the S&P is. So I'll get with you later to shape that out, because I actually think that it helps us on the short side when you find out the thing is really abnormally non-trending. That's another word for saying sideways,
Yeah.
And when it's abnormally sideways, there's almost no other filter that will tell you that this thing is unusually non-directional. Most of the time, we're looking for things that are extremely directional to try to see if there's more coming, or if the trend is over, there's a reversion. But I've also found that on the quiet side of this is an interesting thing. So it's my opinion now that we want to have the color coding driven by the performance of each of those symbols, and it's actually pretty easy to do. And I'll share with you the spreadsheet that I use to do that. So
Okay.
all right. So
Okay.
I just wanted to say that before we went any further. Okay.
So this is Ken's ETF2. I add a G there. It is my guesswork. Ken has his own calculation to calculate the consistency. I'm lazy. I did not. Ken, I just try to figure out a way to do that. Quantitatively, I think my guess will work in the way I wanted. So that's the only thing I want to say. This is really good thing to look at.
Yeah, I'm gonna share with you the offline the calculations that go into that because
Yeah, thank
I,
you.
I respect the effort of trying of reverse engineering, and it would not be easy to accidentally guess what I did with that, but I want to share it
Yeah,
with you.
I think I know how do you calculate these drawings, how do you calculate the quality, that's the easy part.
Yeah,
The only part is the weighted average. I found a
yeah,
way work fine for me. Okay,
yeah,
thanks, Ken.
yeah. All I had to do, I mean, I have to actually keep the score of the last. It recalculates the score for the last 10 weeks and takes an average, but it's a weight. It's an unusually weighted average the way I do it. So
Yeah,
I'll share it with you.
yeah, I did the weekly thing for sure.
Yeah.
Okay, thank you. Yeah, this is the report. The first report is Ken's pan ETF work market model. Here the ETF to the position sizing things. These days, we have 100% position sizing. I really like this. This is my first report. This is no different from Ken's weekly report. This is the sectors report and the asset classes report, the same thing as a cancer weekly report. This is swing system and strategy set of signals include all those. Basically, found all those signals and sorted by the auto-framer reward to risk ratio here.
Yeah.
They're not included the max pin here. I limited to that 25 symbols. So otherwise, some days you give maybe many symbols.
Yeah.
This
That
is
that
the,
may be that is a really handy report, by the way. I mean,
yeah,
if you go back and take a look at that, if I had to default to one page on my own report, the one that's showing me the mechanical swings and then the evaluation criteria, the auto framer, that really is my starting point for finding new signals for tomorrow's intraday trade. Not just the swing trades, but I start with the swing trades and I work up towards the core and I work down towards the day trading, and it's always centered on things that are giving me affirmative signals in the swings because I really think that's important. And then the 1 day change percentage, you immediately get a sense of which ones had the extraordinary move today that could also be the signal that it's in play or it's on fire and all that. Now, tell me how you color coded the 1 day percent change. What's that based
that's
on?
that's the just from the Excel that's function. You color just apply the color greedy, so it will color
Okay.
dark green to the highest one, dark
Yeah.
red to the lowest one.
Yeah. The refinement I'm gonna suggest on that one is that I think we want that coded based on statistics. That compared to the peer group, this thing had an exceptional move compared to all the other choices were out there. And what that tells us is that there was unusual buying and selling activity in the symbol itself. This was not just this thing moving along with the market. No, there was extra buying and selling associated with that symbol. Like,
Yeah,
yeah, so that's an important
but that may be
important element.
accompanied by Z5 and Z1, right?
Well, yeah, in the sniper setup, that's actually I think is a more interesting way to find out where it is compared to its own behavior. The way this is set up, I would have it compared against all of the other symbols that are out there. When I do the 1 day and the 5 day volatility in the sniper, that's compared to its own performance because I want to know when the guys who are specialists in that symbol are abnormally quiet or abnormally volatile. So it's a very narrow, even narrower focus. This one is more like the portfolio choice, which is why I have it compare against the peer group. Like when I look at this, I'm interested in those top five because their auto framer is a much better choice compared to all the other choices. I don't know where that is historically, but when I look at the 1 day and 5 day percent volatility in the sniper, I'm really just comparing it to itself to find out how abnormal it is compared to its own performance. So there's a slight shift in the focus there. Okay.
Yes, sir. I have to digest that and
Yeah.
try it.
Yeah.
Also, the good thing is I can link to the trading view charts. It's also possible link to the stock chart charts. So I can immediately look at the charts
Yeah.
in the setup I wanted. Yeah, this page is the 5 critical states and a Z1, Z5 sorted by the 30-week location.
Yeah.
Also include the RL30 slope C score. Apply that to each of them. I can see it's really deeply oversold or overbought.
Yeah.
Where are we on that? I think a couple of weeks ago you said this is the most important indicator we have. I studied that video
Yeah.
probably a week
Yeah.
to do this.
Yeah. I think this one, these sniper critical states is is unique to us. That combination of location plus the way we're describing volatility, and then the combining those, I think is unique to us, and therefore gives us insights that nobody else is getting. Yeah, this one makes me really interested in China and
Yes,
and Devon Energy too,
yeah.
because it
Later
makes it.
on,
Yeah, it says how much, how bad can it be? It's really bad on every time frame. Oh, but it's also very, very quiet. Well, that's odd. Are they just tired of failing? What could happen next? That kind of idea. Yeah.
yeah, actually after this day, give me a workshop pattern for the FX.
Yeah. Yeah.
Good.
Yeah. I like this. I like this one. I like the structure of the way the sniper framework works. I think it gives you a very good tactical. Like to me, if you can use this and you can combine the earlier things that you're doing with the ETF2 and the swing trade systems. This one gives you real precision on the current state of behavior. The other ones give you patterns and criteria. This one gives you precision in location and motion that really appeals to my engineering mind. Yeah.
Yeah, actually, I don't need to look at the charts. Just
Yeah,
look
I
at
can
this,
tell
I
from
know
here.
what happened. Yeah.
Yeah, yep.
This is the BMR system. This is my 36 symbols actually. Add a couple symbol to your 32 symbol.
Yeah.
This is the normal way.
Hey, tell me why EWZ is coded red.
Oh, that's how I code the filter there.
Okay.
Yeah, that's the cell I code the filter, so I don't miss that.
Yeah.
Yeah. This is the Z-score. The risk Z and SPY are 30 slope. One thing, I actually coded this into the trading view.
Yeah.
So you can look at it from trading view.
Yeah, take a look at that, the Kata 2 pattern on risk Z. The risk Z is so smooth.
Here.
Yeah, go to east, go to the east, go to
Yeah.
the right. No, go to the right. The go into where the red portion of the risk Z makes a Kata 2 pattern.
Yeah.
Go to the right. Keep going. Keep going. Keep going. Keep going.
Ah,
Ah, yeah. Now go to the left.
yeah.
Now see. Now
Yeah.
yeah. Go to the. I wish maybe I could. I wonder if I can annotate on your sheet. That would be interesting. Where I want you to go is the two red humps. It has the higher low, and it's below the zero line, so it's in the red. For where your mouse cursor is, yeah, right there. Yeah, that last big move in the slope Z score. What I just want to show is that the volatility, and I wish I could.
It look like you control the amount.
Oh, can I?
Yeah.
Can you see where my white? Can you see my white arrow?
No, I cannot.
Oh well. Never mind. Go just what I want to just describe with words is the idea that in the risk Z box on the left hand side on the upper box, there's a Kata 2 formation in the risk Z. It had a harsh sell off, then it improved, then it had a minor sell off, and then it started to improve again. That corresponded with the beginning of a historically excellent move in the S&P, which corresponds back to where you're on the price bar, where your dotted line is, that third low. The last 30 days in the S&P have been extraordinary, and that lines up with the Kata 2 formation in the risk Z, which was an early warning that things were good for the swing to the upside, which allowed us to participate in that big move to the upside. I wanted to say that.
Yeah, I think I know what you're saying, Ken. That's actually make me confused when I see that. So this is the Kata 2, but the price is low.
Yeah.
Yeah. Okay. This is another way, present the result. So I think with two fund movers. The first one is I sort by Z5. The
Yeah.
Z5 is the largest one.
Yeah, that one should help you find the ones that are actively moving right now. That's the ones that are already in play. The move has already begun. Then the question is, will they continue to move in that direction, or is it time for a reversion to the mean? And then if you look at the 5-day change on those, you realize those are all really, really large 5-day moves. So the advantage of that is that there's already abnormal psychology at work in the price. Now, we don't know if it's still in play, like it may be done, but it certainly lets you find out where all the activity is or has been recently. And then you compare that to the middle column there, the short Z5 low to high, gives you the opposite one. These are the ones that are so darn quiet that maybe it's unusual, it's exceptional, and something like DIA in that column where it's a double quiet on the 5-day and the 1-day turns out to be pretty interesting. Yeah. Go ahead.
The one, this is just saw Z1 is a
Yeah.
1-day volatility.
Yeah.
This is so the Z score, the largest one, and this is the smallest one, overbought, oversold. So next one, you can see how powerful is this. So this is, Z5 is a 3-point high. Z1 is 3, and Z score 30 days Z score 3. So this is what the move is. Look at this.
Yeah.
And this is Z score 30, 2.9. This is the oversold.
Yeah.
It is really powerful.
What's nice on that one is that when the 1 day Z score is so
Yeah.
small, it tells you that this was unusually compressed. That after a long, powerful move, the one in the middle, after a long, powerful move, somehow it became complacent, that there was almost no trading activity on that day. So you had a enormous 30-day move, and now it has stabilized into the tiny little range at minus 0.07.
Yeah.
The absence of volatility. And
Yeah. This is
I should
the
point out, when that's at zero, that doesn't mean there was no volatility. It just means it was the average volatility. That would have to be like -1 before it became
yeah.
exceptionally small. But yeah,
Yeah.
I love the RL30 Z score slope. That to me is the most important indicator, because you see the turning points, and
Yeah. Exactly.
when it's the owl. The RL30 is the owl, and the Z score on that is the health of the owl.
This is the last report. You just use that to do the
Hey, I go
quick.
back one more. Just go back one
Right?
more. Just something I really want to highlight. Just
Yeah.
as a thing, just to point out. If you look at the middle chart, I want you to notice when the RL10 bottomed out in the middle of the chart, and then it reversed higher, and then you get the RLXD. The RL10 crosses the RL30, and then it hits the PSAR, and then it begins that 30-day move to the upside. That's the owl right there. After a period of 10, they go to the right. After a period of just 10 or 15 days of absolute, the middle chart I'm talking about.
Yeah. Yeah.
Yeah. The that RL10, RL30 crossover, and then the change in the slope of the RL30 from down to up is decisive. And then when price is already past the dragon, dude, that's the lowest risk entries that there ever were. It's important to keep that in mind, especially after periods of miserable selling. That's so crucial. Go ahead.
Yeah. This is the MACD and the Red River.
Mm-hmm.
Yeah. So really,
Yeah.
this table just for convenience, I can calculate anything from R10
Yeah.
to R6 and then the HERs. But one thing I noticed, if I make a 1 hour is $100 and a 3 HER, if I trade AI, I need only about $500. If I trade SPY, I need $3,000. That make me thinking, I have to,
Yeah.
think about my trading plan.
Yeah,
Just
the target. If you're just trading the statistics of psychology, now the cost of taking the position
yeah,
becomes a factor, and how many positions you can afford to maintain. Because You don't want to run out of cash before you run out of span of control.
Exactly.
You would like to run out of span of control before you run out of cash. Yeah.
Yeah, you say it's better. That's something I'm not 100% clear. You say it's really clear about that.
Yeah.
Yeah, this is how I started my spreadsheet. This is the first version of my spreadsheet. I didn't mean to do anything else. I just found out pick up the R10 from the weekly report, daily report,
Yeah.
time consuming. So this is how I started. So look like this is the least important
Yeah. Now
report.
let me ask: you're not typing those numbers in, are you? You're calculating them,
No, no,
correct?
no. This is all from the summary table. I'm
Okay.
not typing.
Okay.
Yeah.
Okay. So I just want to make sure, because that would hurt my feelings if you were typing all that.
No, that's why I started this
Yeah.
spreadsheet.
Yeah. Yeah.
Yeah, all right. So I think that's the end of this part. This is the distribution days I watch every day, but not part of Ken's teaching, just
So
include
tell
here.
me what a distribution day is, and what's the
The
theory behind
SP,
a distribution day?
the SPX down 0.2%, and the larger volume compared to yesterday and compared to the average. That's a distribution day.
More than 0.2% or 2%?
0.2.
So a 0.2% loss
Yeah,
is considered significant
exactly.
if it is high volume.
Yes.
Where does that number come from? Why is
Uh,
0.2 why is
this come
0.2
from,
significant?
the ABD, right?
So IBD says
Yes.
a 0.2 selling
Yeah.
is significant. Now let me ask you this:
Yeah.
what's the average volatility of SPY?
Well, that's much more than that if we think about
It's huge.
ATR.
It's over 1%. It's like 1.5%, I think.
Yeah, yeah, yeah. Yeah.
So I'm just wondering how they figured why 0.2 is
Yeah.
should trigger an alert that suddenly we should be taking new actions because the S&P was down 0.2% on any given day with strong volume.
So
That one feels like a historical artifact that is not current. And the reason I say that is that before the internet bubble, the average volatility of the S&P was 0.7%. During the internet bubble, the daily range was 4%. So it was 6 times more volatile during the crisis than it was during regular normal times. After the internet bubble faded and things got back to a new normal, the new normal for the S&P 500 was 1.5%. So a year after the internet bubble, what was normal in the S&P at 1.5 was twice as large as what the normal was just a year earlier, and nobody noticed the difference. At 1.5% daily volatility, that felt easy and normal quiet, whereas just a year earlier, that would have been extraordinary. Well, I say that just to say that to me, a 0.2 loss doesn't feel like it should be considered abnormal. Like, for instance, if I was in a market classification and it was a bear, I should see 0.2 each and every day. Is that just means that, hey, there's It's still in a distribution. It's still in a distribution. It's still in a distribution. What happens the first day that it's not down 0.2? Is the distribution over? Or so my before this becomes actionable information to me, I need to know why did they pick that as the significant number? What part of sense making theory is it part of? And how do I turn that into actionable information? And why do I need that information in order to make my decision? Is it necessary or is it just nice to know? So when I'm looking at elaborate spreadsheets and elaborate dashboards, and my own report is another example of that, I'm constantly with part of my brain trying to fight against my own tendency to complicate things. I want to study things that are in the market mosaic, but I want to try to be clear about which ones that I really need and what's my priority and how do I do all that. So I needed to understand the theory behind distribution days and where it comes from. And it seems to me the point two, in my view, is questionable.
Yes, Ken. Point two doesn't make any sense in itself.
Yeah.
Those numbers only make sense when there's an overbought and oversold condition. Also,
Okay.
we
Got it.
also we have not only one, we have at least four distribution day in 25 days at the
Yeah.
overbought condition.
Yeah.
We also care about the down volume over the up volume,
Yeah.
which in this, if there no other condition present, this distribution day meaning nothing,
Yeah.
have no meaning to my
Yeah. So this
model.
this adds a lot of information about volume and larger market conditions too. Okay, I see that.
Yeah, exactly. So right now, it's only one distribution day. There are no big volume down.
Yeah.
So it means nothing for
So
now.
not significant yet. Okay.
No, never. Even we have when we test the swing high a couple of days ago,
Yeah.
yesterday,
But then I
not,
noticed where on December 6th, that is considered a distribution day because both of the criteria were hit.
yeah.
But then if that's the only one, but that's the only one in the previous 20, that's just sort of the absence of distribution days now lets you know that the market is being bought, I suppose.
yeah. That
And
means the
then
market really strong.
over on the right hand side, the number of distribution days in the last 25, is that how I read that?
That's how this is how the spreadsheet do that.
Yeah.
This is we have to adjust by hand
Yeah.
because the spreadsheet not that smart. There's a couple other ways to count that. It's not only one
Yeah.
condition. 25 days, and also there's a follow through days. After the follow through days, you count again. After the 5% up from that day,
Yeah.
you have to drop that. So that's a couple rules for that.
Yeah. This is one of the reasons, by the way, in my own brain, I don't, I consciously eliminate volume studies because because it adds extra complexity, but it doesn't bring clarity to me. I find it, and I find and that's why I sort of limit myself mostly to large caps where the volume, as long as it's a liquid market, then I can get my orders in and get good fills and all that. So I like things that are actively traded with lots of volume, and then I ignore any finesse of the volume signals. But that's a personal preference.
Yeah, I update this daily because the daily data, but
Yeah.
this table only useful for once or twice a year. That's how this useful.
I see. Yeah. Okay.
Okay. So this is a little bit about Excel. The thing is, the data is free, but the intraday
Yeah.
basically this function and change the type so I can get all the data I needed.
Yeah.
This is how I build my ETF database. First, I copy from the master.
I
And
like the improvements that you made on the over on the right hand side, PDBC for the diversified commodity, and I like the
yeah,
inclusion of India. And I
yeah.
think that ICLN is probably a better choice than PBW
Uh, it's
for the
different.
clean energy.
Yeah, yeah. But the PPW more volatile.
Right.
Yeah,
Right.
it's good for your intraday or swing trading.
Yeah.
But the spread, intraday spread is too large for me. I cannot handle that.
Yeah. And then I like the addition of the ARC innovation because she has really put herself out there as a target. You know, people that love her follow her, so there's money that is following her decisions, and then the people that hate her can see exactly what she's doing, so that they can target. So it ends up being an idea or an attention magnet, and it's another, it's a reliably volatile symbol. And every time, Yahoo Finance has an article on Kathy and the ARC, it's guaranteed to have extra volume for the next 2 or 3 days, which is good for short-term traders. So
And
I
because
like the improvements. Yeah,
so now if I want to expand my symbols, I just use this philosophy here.
yeah,
Or you can go to the two website to find all the ETFs. I
yeah,
like this website because it's have a correlation study for the 250 days. I like that.
yeah, yeah. My own study. I've done a lot of studies on the correlation coefficients over time, because what I wanted to see was what happens to correlations during bull markets and what happens to correlations during bear markets. And what happens is that in bull markets, if you look at the ETF 10 or ETF 13, that you get a wider spread between the one that is most strongly correlated to the S&P to the one that is least correlated to the S&P. You start getting a spread, that it is a wide range, because money is going to one or the other, and the outliers are interesting. But during bear markets, the correlation coefficients all move towards 0.99. That the what used to be diversification disappears during moments of crisis. And that's always the case. There's never been a case of a major market sell off where the correlation coefficients didn't collapse. So, one of the things I like to do is measure the Z score of the spread of the correlations. When things are widely uncorrelated, that tells me that money is really actively trying to find the new leader and is rotating quickly. But when the correlations start to converge, that means the guys are done with that and they're starting to become scared, and that's been an early warning that maybe the market season is getting ready to shift towards the bearish. That people are starting to get scared, and they're not searching for diversification, they're looking for safety. So I like, to me, the correlation is more useful as a time series than as a single snapshot. What that one shows right there, the correlation of returns, shows a snapshot, but that actually changes considerably over time. So I would be careful on. I don't know of any websites that show that, and that's why I believe there's an advantage to understanding the time series of how correlation changes over time.
Yeah.
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 For me, I just use this to eliminate symbols. Otherwise, my database is too large.
Yeah.
Okay. Talk about lesson learned, and the big one is, be aware of the dynamics of PPEA. I never thought about I use my 4 months no trading that do the development of spreadsheet. So that's often make me frustrated. So I have to say, yeah, I'm gonna prepare for 10 years from now, so I feel better. Um, I may not use all those information I develop, but so what I prepare myself for 20 years. Uh,
Yeah.
Within not accomplish anything, just work on the cell by cell. One message maybe need me a couple hours or days to fix. That's certainly gonna make me nervous. The other thing I can say, continuous learning and continuous improvement. 4 weeks ago, my spreadsheet not like this presented today. Also, I learned the coding the Pine script for the trading review just half days.
Yeah.
I so badly need a chart. I wanted to show the charts, but nowhere I can find. I say, okay, I do myself. So that's why I say Google is my best friend. Whenever I need something, I Google, I listen to YouTube, finish something really quick.
There's a really good website, by the way, for Excel called Excel is Fun, all
Yeah,
one word, no spaces.
yeah.
And that has and they have a very good YouTube channel. But that's my go to source for fun with Excel. Excel is fun. From all the way up to VBA programming and all that stuff. And that's a especially good YouTube channel.
Well, I think Microsoft have a AI
Yeah.
called Copilot that may be working with spreadsheet.
Yeah.
So let's see.
Yeah, I want to talk for a minute about that continuous learning and continuous improvement. The point on curiosity, what does Ken think, believe, know, do about it? Cause of deviation from your plan. I think it's really important that you're doing this work to persuade yourself that you can do this work, that you can trust your judgment, you can trust your craftsmanship, and that you can draw your own conclusions and then take a position on the basis of it. It leads you to independence of judgment. I'm not saying discount what I'm saying or what others are saying, but it gives you more confidence in your ability to see it and understand it and then act on it. Keep your curiosity, but make sure that there is a wedge between the impulse to act and the action. Don't let curiosity always lead to action. Curiosity should lead to understanding. Understanding might lead to action. It might lead to saying, "Oh, I don't need to act on that," or whatever. So, yeah,
Yeah, my brain works this way. I had I read something or listen something you said, I jump off my treadmill, I won't try right away.
Yeah.
That's how I accomplished this spreadsheet.
Yeah. Yeah. That the spreadsheet itself is a barrier against impulsive acting. So that's good.
So move on to my plan for 2024.
Yeah.
This is where I am. Look at the average R. So a little bit above zero, a good thing. But the bad thing is, never get something really significant. So this is where I am. This is the trade I take
Yeah.
about 2 weeks. So after this, I start my spreadsheet to try to understand more about Ken's teaching.
Yeah. What I want you to do on this one
Yeah,
is I want you to do what Luke is doing on the rolling average R,
yeah,
that he uses 3 moving averages,
yeah,
30, 60, and 90 trade averages, like a
yeah,
short term, middle, and a long term.
yeah,
And has that in order to see what the different, if the short term challenges or short term big wins are abnormal or whatever. And it makes, because if you don't make it a rolling average, then pretty soon your N gets so large that the needle never moves until it's too late. So
yeah,
30, 60, and 90 turns out to be a very good combination
yeah,
of averages on that.
yes.
And I think you'll see that in his briefing.
Yeah, I know how to do it.
He's briefing on the 18th. So
Yeah,
yeah, that's a good one.
yeah. So, so my plan is my general objective is to learn hybrid trading and use market money to beat core positions.
Yeah.
That's the way I understand. My major challenge, is not show, it's not show here, but my major challenge is lowering my initial stop and increasing size of losing position. That's just out of wrong belief and ingrained bad habits.
Yeah.
They rarely occur, but I know that's my biggest enemy. I'm willing to accept losses happen after losing streaks and out of zero states.
Here's the way, something I invite you to think about:
Yeah,
increasing the size of a losing position or using markets money. There's nothing that says we have to use open gains as markets money to add a second position. You could just as easily say, look, I'm going to close a winning trade on one position, and then from that realized profit, increase the position size the next time.
yes,
That way I'm using markets money in a deliberate way, as opposed to being emotionally positive about a win and then increasing the position size, or emotionally negative about a loss and then try to hurry up and add more to it so that when it turns around, I can get all my money. So just committing to a standard position size for the whole trade period, start to finish, be done with it, and then if it works, increasing position size the next time. In that way, you're rewarding the winning trades towards the future. It keeps that a little more stable.
yeah,
So just
yeah,
something to think about there.
yeah. So my next challenge is enter too early and exit too early.
Yeah.
If I trade SSC, I cannot wait.
Yeah.
The true signal come out.
Yeah.
And then once I take a trade, I become fearful. So that's why you don't see this growing.
Yeah, one of the ways. I keep reducing the size of the initial position until the fear and greed are not triggered.
Yeah.
You know, maybe it's a third of the position. Like enter a third of the position with the SSC,
Yeah.
and then 2/3 with the owl, or 2/3 with the cockatoo, or something like that, just so that we can be more intentional and calm, almost disinterested.
Yeah.
You know, I watch the way, when I watch poker on TV, the tournaments. I watch how they throw their money in for the ante or their opening. They pick up, they just throw it in. They either aren't worried about it at all, or it's so standard they don't care, or they're masking their feelings really, really well. But that, just taking the position and not making that change their mind and change their emotions. So I watch that behavior very carefully.
Okay. So my action plan is just practice standard katas with
Yeah.
very simple and mechanical
Yeah.
how to finish that. So after learning your coaching to Queen, so this is my plan for next 5 weeks.
Yeah.
That's really, really simple. Just a piece of flip in, piece of flip out. No other rules. Oh, that's my plan. So
Yeah. I think the way Sundeep Gupta, the way he laid out his plan, and novice, journeyman, professional, he was measuring his skill at performing the task routinely. That looks like it might work here too.
yeah, I
Are you
watch this.
are you doing those things? Yes or no each day, and
Yes.
each week?
Yeah.
George is doing that with his in the daily chat room with his daily after action review. He's measuring himself against those stated standards every day, and that is helping him.
Yes, sir. So now go to the this page.
Yeah.
Oh, I really like the butterfly dreams story,
Yeah.
and I really want to say thank you, Ken. I learned so much from you. I really want to thank you, the community, everybody, and the our accountability group meet weekly. Thank you, Ken. This is
Yeah.
the end of my presentation.
Yeah. I want to recognize Greg's got a question in there. He was in the chat. He's typed it out here about what is the actionable limited target count. Just stop. I think if I were going to answer that for you, I'd say you've decided on this experiment just 3 positions. Maybe look at the top 5 and then take the 3 you really want to concentrate on. And eventually turning these into alarms and orders. This gets towards the span of control and how complex is the dashboard.
Yeah.
We got to monitor that as engineers to make sure that we don't miss the important signals, flashing red lights and that kind of stuff. So, and then when you settle in on that rule set, depending on what it looks like in 5 weeks, then we want to be very efficient in the way we make our decisions, so that we get just enough information to make the decisions that we've decided that we want to make, and be very economical in how much information we have to monitor. There's we don't want to have to overthink the entry decisions. If anything, we want the exit decisions to reflect complexity if we have to, but not the entries. All right. Any other questions from the gang out there? If not, I'm going to say thank you so much for this hard work. Looking forward to your work in progress here. Remember, you've still got you've got office hours available, and creativity, and in the coaching, the small group coaching program. I think we're going to meet on Wednesdays. I'm taking a look at Wednesdays at 7, as a way to do the coaching on works in progress for your work. And so
Yeah.
we'll do, Tuesdays will be creativity, Wednesdays will be the coaching program, Thursdays will be foundations. So that's the battle rhythm for those 3 days. So as you get information from your science project, Wednesdays would be a good day to share that with the other guys that are
Okay.
taking the coaching. I think that would be a good. You'd be setting a good example for them. So if you would be willing to do that on Wednesdays, you plan on doing that in January.
Okay.
All right. All right, guys. Thanks so much. We're gonna declare victory on this one and get it published and posted here shortly. I may not have mentioned it there, but Dan's going later tonight at 7. I have made a lesson in the research workshop for all of the Q&A sessions in one place. I will hang this one in your folder on your lesson, but I will also put it in the folder that has all of the Q&As in one location for easy access. And then for Greg's note, I'll send everybody in the foundation's link that wants to get the research weekend added for a deeply discounted price. I think I'll send that link out today. All right, Chinlong, you take good care, my friend,
Okay. Thank you, Ken. Bye now.
and take good care, everybody.